There's been plenty of noise this week: a government shutdown, delayed data, and financial and political drama. But mortgage rates have remained remarkably steady. I'm Danielle Hale, chief economist at Realtor.com, to break down what I'm watching as the spring housing market approaches. This week's partial government shutdown has been resolved, but the January jobs data that should have been released Friday has been pushed back. We'll have to wait for it. Indications from private data suggest that it could be a relatively weak report, but we'll have another update before the Fed's mid-March meeting if data is released on schedule, so it won't be the final word. In the last week, President Trump nominated his successor to Jerome Powell's chairmanship at the Fed, Kevin Warsh. Although he served as a Fed governor from 2006 to 2011, Warsh may face a drawn-out confirmation process, as some senators have indicated that they don't want to move forward until investigations into Chair Powell have ended. Despite the political drama, mortgage rates were essentially unchanged, ticking up just 1 basis point. For the last 6 weeks, mortgage rates have hovered in a narrow 10 basis point range, just above 6%, a favorable spot for aspiring homebuyers and sellers alike as the spring buying season approaches. In addition to decent mortgage news, we saw an uptick in the U.S. homeownership rate overall and for those under age 35, even as the rate slipped for households in the 35 to 44-year range. This report also showed steady to slightly higher vacancy rates for both homeowners and renters, bringing back some much-needed slack that is likely to help stem price pressure in the housing market. Consistent with that, the number of for-sale homes rose for a 27th month in January, according to the Realtor.com Housing Trends Report. However, the pace of recovery relative to pre-pandemic norms lost some steam. Newly listed homes changed little over the prior year pace as listing prices flattened, a possible sign of more modest expectations from sellers. At the same time, data suggest a bit of a pickup in buyer activity, and the next few months will test whether the market remains balanced or shifts more meaningfully as rates remain low. Looking at Realtor.com weekly data, the clearest trend is the impact of last week's snowstorm. New listings dropped sharply as snow and ice, freezing conditions, and power outages affected much of the nation. I expect to see a bounce back in the weeks ahead, but it's worth keeping in mind that we could see similar storm-related effects in the January existing home sales data that NAR will soon report. Turning from a literal freeze to a metaphoric one, rents rose in New York City, continuing a trend that helped usher in the Mamdani era, according to the latest Realtor.com New York City rental report. Already, rent-stabilized units mean New York renters are less likely to move, limiting mobility and dynamism in the rental market there. A freeze on further rent increases would likely exacerbate this trend. Finally, we have 2 very topical luxury market showdowns for you. The first report features a comparison of Charleston, South Carolina, and Savannah, Georgia, markets full of Southern charm and historic architecture that have me dreaming about spring break. The second report examines high-end real estate in Super Bowl contenders Seattle and Boston, highlighting the surprising commonalities and differences in each market. It may not help you predict who will win, but it could help you decide who to root for on Sunday if you've not already got a team. You can find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates and Instagram for graphics.